Good afternoon, this is Mike Pedelson, the bear market investor with the market update for March 6, 2011. We're here looking at the S&P 500 stock index, so we're going to be looking at the Volatility Index after that. First, let's have a look at our hourly chart here on the S&P 500. On February 18, it looks like we may have put in the top tick of an ABC correction from the March 2009 lows, suggesting that the larger trend has changed from up to down. From there, it looks like we have put in a first initial 5 waves down. But we have not yet broken below that low, nor have we broken above the February 18 high. From the February 24 low, it looks like we are still in process of carving out a correction. That does not yet look complete. On the hourly chart here, we can see a divergence in the MACD histogram. In that, we probably are going to see a lower tower put in on the MACD histogram before turning back down again. And I believe that may put in the final push or thrust to the upside here, if indeed we are going to get one. But we do have a confirmation of a higher low here on the MACD histogram, as well as on the MACD, on the stochastic, and on the RSI. But we also have that divergence in place here on the RSI, suggesting that there is not yet as much strength in the RSI or in this push to the upside as we had previously had up until this point. We still may exceed this point here on the RSI, but I would expect that we would probably end up somewhere short of this last peak here on the RSI before we turn back down again. We'll see what happens, but it does look promising in any case. So I do not believe that we are yet finished with this correction. However, there is at least a possibility that we may be. Let's go ahead and jump into the other charts as well on the S&P 500 and take a look at those. Now the 30-minute chart here also looks fairly bullish in the short term, in that we're probably going to see a thrust to the upside, and we think that thrust may end somewhere around that 78.6% retracement. These prior two pushes right here ended right about the 75% retracement, or 3/4. This peak being a fraction of a point higher than this peak right here. We're seeing a higher low on the MACD. We're seeing the MACD histogram curl up as well, ticking up, probably going to move into positive territory, hopefully putting in a lower tower. The stochastic is looking bullish, as is the RSI. Let's go ahead and have a look at our 15-minute and 5-minute charts. Similar here on the 15-minute chart, it looks fairly bullish in that we are moving into positive territory here on the MACD histogram. We are ticking back up here on the MACD, putting in a higher low, confirming this short-term uptrend. Likewise, we are above the 50 on the RSI. So everything really here looks fairly bullish for the short term. Again, you can see here that final thrust up into resistance that we had at the end of the day on Friday. Let's go ahead and have a look at our 5-minute chart. Now the 5-minute chart here also looks fairly bullish in that we have a higher high here in price. The MACD histogram is putting in a higher tower. The MACD is continuing to push up in strength beyond that last peak right there. The stochastic is showing a lot of strength here in at 94.80. The RSI is above 50 at 69.39. So I do expect that we're going to, even though we are finding resistance here at this trend line, break beyond that, and we're probably going to head up into that 78.6% retracement and this ascending area of resistance, this trend line right here. Now if we push convincingly beyond those levels, we need to be on guard, as I've noted in prior videos. Moving beyond the 78.6% retracement is not a good thing. because while corrections can retrace as much as 99% of the preceding rise or decline, we don't want to see that happen. We don't want to get that close because odds continue to diminish beyond that 78.6% retracement that we are in fact correcting, and that the trend that was in place before is not just continuing. We do have a pretty compelling Elliott wave structure here and a pretty compelling reason to believe that we are in fact correcting from that decline that we had from February 18 into February 24. So we'll see how this plays out Monday, maybe into Tuesday, perhaps even later, but I think probably Monday or Tuesday, as far as time is concerned, is probably about the best time frame to expect this to conclude. So we'll see what happens. Let's go ahead and jump into the volatility index. Now we're looking at the daily time frame of the volatility index, and what you can see is after we had that breakout in volatility, we've been moving sideways and showing some amount of weakness and hesitation to the upside. We have not yet confirmed that breakout, but continuing on higher. But we could see that on Monday or Tuesday. But until such time as that happens, the VIX continues to show weakness, and we could come back down to this ascending area of support here, or perhaps even the horizontal level if we had a very, very deep retracement on the S&P 500. Let's hope that doesn't happen. But until such time as we have a breakout here in volatility to the upside, confirming this bull move right here, we have to be on guard. Ultimately, what we want to see is we want to see a break of the 78.6% on the Fibonacci fan in blue. We want to see a break of this declining area of resistance in the long term on the volatility index, going all the way back to the highs in the volatility index that we put in the 2008 stock market panic, through the April 2010 panic as well. Once we break beyond those levels, I will become very, very bearish on the market, and that will help confirm that the trend has changed from up to down in the S&P 500. Until such time as that happens, the market does have some options. But looking at our Elliott wave structure and the best count that we have till this point, it does suggest that we are probably going to see that breakout to the upside occur very, very soon, and that we will see a penetration of these resistance zones right here. One last thing, if you do appreciate the work that I'm doing in the videos that I'm producing, please do rate and comment on the video. And if you are not yet a subscriber of the YouTube channel, that would be great as well. It just helps show me that a number of people are following the work that I'm doing here, and that it's worthwhile and continuing to do so. I don't charge any money or ask for anything in return other than just some thumbs up, some appreciation for taking some time out of my day to share this stuff with you. So have a great weekend. I do look forward to creating some more videos next week, assuming that there's something to comment on. But I assume next week we probably will have something to comment on, maybe Monday or Tuesday. Have a great day.